Welcome to Deal Dynamics. This podcast is all about selling your IT and tech business. We'll tackle topics like how to sell your business and how to manage the process. Don't forget to subscribe, hit that like button, and comment on what you'd like to see in future episodes.
So in this episode, what we want to talk about is how do we gain maximum value when I'm selling my business? Steve, what's your thoughts on that?
Yeah, I think it's a hell of a question, but there's three key things. Understanding the drivers of value within your business, and that's what we look to do in our TRR, we understand what buyers are looking for, and we can accentuate these positives, understand the drivers, and make the proposition clear.
Is that just recurring revenue?
That's what some will tell you, but no, it's quality. It all boils down to quality of income and a surety of cash flows going forward. So some of it's recurring, it is obviously a factor, but it's the quality of the customers that you're selling to, the quality of the staff you have, the longevity of your relationships with the customers. There's a checklist of, 20 levers of value as we see it, the size of your business, the growth, your forecasting, all sorts that go into this. And it's one thing is having them within your business, the other thing is explaining them to an acquirer and allowing them to place the maximum multiple upon your business. So understanding and proposing the proposition for your business. Next is contention. As anybody who's ever sold a house will know, you don't just sell to the first person that knocks on the front door or is shown through the front door. It's a matter of going out, not far and wide, because that's not something we ever do, but it is targeting through our team of experts on the sales side, acquirers who are in a cycle of buying and are likely to be interested in your business and pay the maximum value for your business. And the third thing, and probably the most important, is stopping the erosion of value from the offer. You can propose, you can get the best acquirers in the ring. If there's either a fundamental problem within your business that wasn't uncovered prior to going to sale, or you are not able to negotiate your cash position, your net equity bridge at the end, you will see an erosion of value. Or if performance dips as you are having to be distracted from running your business to oversee an exit process, can lead to a dip in performance and erosion of value. So it's those three things, I would say, are the main
You talked
factors.
about your equity bridge and your net cash. Why can't that be just a number?
Well, it's what people often who are not in it and haven't really thought through the implications of it is that people think they sell their business, they clear out the bank accounts and off they go. Now that it's always, as in these things, it's more of an art than a science, and it's coming to an agreement with the acquirer on how much working capital will need to be left in the business. So what's the average trade debtors? Have you accrued for holiday? It can be a multitude of things, and it's all a negotiation, and the buyer will try to, through their advisors, reduce the level of cash that's left in it or is left for you to extract from the business, and that's part of what we do, is help the seller maximise that return.
Is that just a small amount, 5,000, 10,000?
Oh, well, it can be I would say in 3 of the last 10 transactions we've overseen, the net cash calculation and how much we've gained from the initial position has more than paid our fee. So it can be big numbers. One relatively recent one, the start position for the net cash was, well, you're going to have to leave £100,000 in the business because you have a lot of liabilities, and we think that you haven't put this on the balance sheet, and this isn't very complicated stuff. But after investigation through us and thorough interrogation of their position, we managed to make a counter proposal which was accepted of plus 250,000. So can be huge sums, yeah.
Okay, Great.
Thanks for listening to the Deal Dynamics podcast with your hosts, Gary Smith, Stephen Taylor, and Jack Chiappi. Please subscribe to our channel, like the video, and comment on what topics you want us to discuss. Don't forget to sign up for our newsletter as we provide insights, reports, deals, events, trends, and more. Just head to venturecorporatefinance.com/newsletter to sign up for free. The link is also in the description. That's all for now, folks. See you next week.